Hi, everyone. My name is Diane Phillips, and while you're getting settled, please take a look in the chat for the links to the slides and reference materials. These will also be emailed out to folks at the end of the program. So we're going to get started. My name is Diane Phillips. I'm a partner with the Holland Knight law firm. I'm joined by two friends and colleagues who are going to be co-presenting with me. Elizabeth Kroll, the National Client Director for EBI Consulting from the technical perspective, and Jared Dabrowski, Vice President of NFP from the environmental specialty broker perspective. And so today's program is going to be discussing environmental insurance for emerging risks. We've had a lot of discussion in the news about some of the emerging risks that are confronting property owners right now and potential buyers for transactions, including emerging contaminants and climate change risks. And so we're going to be talking about a little bit about that, including how environmental insurance can be used to address these potential emergent risks for your transactions. The overview is what we're going to cover today. And without further ado, I am going to turn this over to Elizabeth to talk about some of the emerging contaminants.
Thank you so much, Diane. Since we're celebrating Thanksgiving this past week, I've been thinking about all the things I'm thankful for. It includes the ability to interact with you and Jared and collaborate on this program. So thank you for having me today. So as Diane said, we're focused on how we identify environmental risks, including emerging contaminants such as PFAS. And so we're going to talk a little bit about the intersection of due diligence and insurance. And we're going to share some practical approaches to help you identify emerging risks in your transactions, especially as you consider the scope of work for new acquisitions. So as part of our discussion today, I'd like to just give a little bit of background on PFAS, which for many are sort of the hot topic in emerging risks, what so many of us are focused on right now. And so just as a quick refresher, what are PFAS? Well, as many of you know, in the environmental industry, we absolutely love acronyms. And so it's a bit of an alphabet soup, but I will break down just a little bit of what we have here for you today. So PFAS is sort of a collective term to cover per and polyfluoroalkyl substances. And what this includes is PFAA or perfluoroalkyl acids, PFOA, perfluoroactanoic acid, excuse me, it is alphabet soup. And so what I think maybe you might also hear is you might have heard people refer to this as C8. This is the name that was dubbed for PFOA by 3M, the company, in circa 1990. Unfortunately, their own internal studies were finding that this posed a great risk for testicular cancer and other cancer risk, unfortunately. C8 is also the key ingredient in Teflon and other products that you may have heard about. Perhaps you've seen the documentary, The Devil We Know, or perhaps the feature film, Dark Waters. Neither of these is relaxing. So rather than saving this for a movie night, but do consider it maybe perhaps for some educational background into what's happening with these emerging contaminants and where they came from. Another emerging contaminant, PFOS, perfluorooctane sulfonic acid, which is also called sulfonate. 3M scientists described this as the most insidious pollutant since PCBs in 1999. So really, why is this a problem? Well, for all the reasons that chemically these are wonder chemicals, the chlorine carbon bond is the strongest in nature. And regrettably, that means that while these have so many valuable properties, it also means they are persistent or forever chemicals. And so those properties that make them desirable also cause so much for concern for us. You may have seen the Environmental Working Group created a timeline on their website, and they show how we've known somewhat for decades, and yet our regulatory process is still evolving. And so Diane is an amazing resource in this regard. She tracks this on, I think, a daily basis, and it seems like it changes on a daily basis. So it's important to keep an eye on this. Just a month ago, US EPA released their commitment to action over the next 3 years. So really, it's important to stay on top of this, especially because at this date, we already know 120,000 facilities may expose people to PFAS. And while the biggest clusters are in facilities such as Oklahoma and Colorado, they are ubiquitous. They are nationwide. And so why is this important? Well, it's important because when we think about transacting property, this has become a focus area. Owners and operators want to know what potential risk they may have. And often this comes in the form of drinking water impacts. But as due diligence professionals, we're looking to assess any and all risk, any and all environmental risk associated with a property. So the reason we're talking about PFAS today is, again, because they're persistent, forever chemicals, and because they are ubiquitous. And so if we could go to the next slide, I'll just give you a brief overview. So PFAS, again, have many industrial uses in plastics manufacturing as a coating for paper, for cardboard, wire insulation, electroplating, and in so many places. And maybe one of the most important that we'll talk a little bit about is that it's the main component in firefighting foams. You might see this abbreviated AFFF. It's really because of that it's seen in so many industrial uses, but it's also in consumer products. So as an example, I mentioned Teflon, so nonstick coating in cookware, waterproofing or stain resistant clothing, carpets, upholstery, all of those uses. So as I said, ubiquitous and it's everywhere. So that's why it's important to us to talk about today. And so for our environmental professionals who may be conducting phase ones, as well as the environmental attorneys and risk managers who are helping to review and digest those reports, you want to keep an eye on these types of operations, activities, both on-site and off-site, how they may be of concern regarding specifically PFAS and other emerging contaminants. If we could go to the next slide, please. And so as you're performing your due diligence, we want to keep an eye on these various triggers. For example, as we said, the firefighting foam and use at airport and fire and other uses. So why does it matter? Well, again, they're highly mobile, they're persistent in the environment, they can be seen via discharge up to air emissions, as well as leaching through soil and groundwater. And this direct discharge from industrial facilities to groundwater and surface area is really where it becomes a problem. And also because it bioaccumulates in both the produce and livestock that we consume. So there's a great flux in the legal landscape. As I mentioned, Diane is a tremendous resource for this at the federal, state, and local level. So absolutely stay in touch with her to keep on top of what the regulatory climate looks like. If we could go to the next slide. So I just want to share a little bit more regarding some of the other emerging risks. Diane, do you want to talk a little bit about climate change impacts, please?
Sure. Thanks, Elizabeth. So we've heard a lot about the climate change impacts that we're seeing with more frequent and high intensity storms, with risks of flooding, increased precipitation, sea level rise, and storm surge. And we are just starting to see regulators, and particularly this is happening in Massachusetts already, start to consider what these climate change impacts could have on sites that are contaminated. And particularly if flooding or precipitation, sea level rise, or storm surge could potentially release contaminants beyond site boundaries or further into the environment, where stable contamination basically becomes mobile. This is a concern particularly for petroleum contamination, NAPL, where it may have only micro scale mobility, which is how we describe it in Massachusetts, but become more macro scale mobility with the infusion of a high groundwater table or something like that from a climate change impact. And with the potential for just increasing climate change consequences, more and more regulators are looking at environmental sites through that lens, including what must be done in terms of remediation or creating basically regulatory reopeners where contaminated sites were previously stable and closed and now may present some increased risk. This, of course, is an area with increased scrutiny from the public in general and governmental entities. So we view this as an emerging environmental risk. And as Jared will discuss when we turn to more about the insurance coverages, So we're not talking about insurance coverage for the actual flooding or increased precipitation, but for the risk that pollution or contamination will be mobilized as a result of climate change impacts. So next slide, please. Handing it back to you, Elizabeth.
Thank you, Diane. So as we indicated, we're really here to talk about the intersection of due diligence and insurance. And one of the reasons that this has come to the forefront right now is many of you may know that the new ASTM Phase 1 Environmental Site Assessment Standard was just published. That is happening concurrently, as I said earlier, with nearly daily updates regarding PFAS around the country. And so the combination of these two has really brought these concerns around emerging contaminants to the forefront. So just to share a few things, our prior Phase 1 ASTM 1527-13 standard include the classic REC definition or recognized environmental condition. And often this is how we bring to the forefront all of the due diligence that's performed associated with a transaction. And we pull together these environmental records and we come to a conclusion whether or not there is the presence or likely presence of hazardous substance or petroleum products in, on, or at the subject property. And so this is the classic REC definition that likely many of you are familiar with. What you'll note is that PFAS is not designated as a hazardous substance under CERCLA yet. We're getting closer every day, but it's not yet. And so while it's not a hazardous substance, and it may not meet the definition under that description to meet the REC definition, it is included in the all appropriate inquiry rule. Some of you may know this as 40 CFR Part 312. And we're getting a little closer. So I just wanted to share that in the new standard, which was proposed and is now published, there is a clarification in Section 13 regarding non-scope consideration for emerging contaminants. So you'll see more focus in the current standard and going forward. So definitely keep an eye on that. And I think it's important that the language that your due diligence professional uses in their reports is carefully prepared to be focused on these particular substances if you are seeking that information. So it's important to have a dialogue up front about the scope of work, as well as the findings as you develop them of your report. And that's a really important time to make sure that you're bringing your environmental counsel into that conversation. This is a great way to ensure that you're getting the risk management support that you need. So while we could do an entire webinar on the new standard, the most important thing here today is to talk about how you might provide risk management services coverage through insurance. And so I'm going to pass the baton to Jared now, and he's going to help us understand what options we might have available to us. Thank you.
Thank you, Elizabeth. So for the purpose of today's discussion, we are going to focus on site pollution liability policies, but there are multiple different environmental policies out there. It includes contractors pollution, storage tank, lender, and there's even some more beyond that. Next slide, please. So if you look at the history of environmental insurance and standalone environmental insurance coverage, it really started to come about in the late 70s with the creation of a lot of the environmental laws, Clean Water Act, CAA, CERCLA, and that was the basis for it. Prior to that, your GL policies did have some pollution coverage in there, or it wasn't excluded. Late 70s, early 80s was also when the absolute pollution exclusion came out, which is now standard on GL policy forms. So a GL policy is not going to offer you any sort of pollution coverage, really, maybe a little bit in the form of bodily injury for certain things such as mold. We can jump to the next slide, please. So when we look at the site pollution policy, the most significant policy coverages in the site pollution policy, it incorporates multiple different coverages. So remediation and cleanup is something that everybody thinks about. So that's usually unknown contaminants on the site. Your coverage for third-party bodily injury and property damage. So that's in the event that something migrates off-site or you have a tenant who makes an allegation against you. Defense costs, which is incredibly important because a lot of the claims we see, they come in as defense, and that's probably one of the biggest costs. So defense and third-party bodily injury coverage can really add up. So the coverage is also for pre-existing and new conditions, generally pre-existing unknown conditions, but if we do have enough due diligence, it's very often that we can get coverage for bodily injury claims associated with pre-existing conditions if they do migrate off-site. The site pollution forms now, most of them also do include transportation coverage. So if there's contamination or a pollution condition as a result of something that's taken from your site, could be covered. There is coverage for non-owned disposal sites. So if waste from your site ends up at a landfill or the incorrect landfill, you can get coverage for that as well. Business interruption is another very important coverage that most people don't think about. Elizabeth can tell you, if you do have to do some sort of remediation at a site, you're likely going to have to shut it down for a bit of time. If you do have to shut down a site as a result of a pollution condition, business interruption on a pollution policy would kick in. You also have illicit abandonment, and that's an important coverage on a vacant site or any, not necessarily vacant, but if, for say, you have a site that's very large, multiple acres, you have some wooded area or a development site, somebody could go in, dump something at the site, such as construction material that's laden with asbestos or lead, and then you're stuck on remediating that. So that's something that's very important. And then crisis management. A lot of these big companies now, if they get pulled into something, the policy is going to respond. They have the ability to get the right PR people out there, because now image is everything, as we know. Next slide. So coverage triggers, and these are important. Allegations can set off a pollution policy, and that's very often how it happens. So it's the alleged or actual release of pollutants, either on a site, migrating from a site. So you can have a neighboring property that says, you know, they go to do some sort of construction, they find something, they may make an allegation against you. That is enough to trigger the policy. Violations of law, becoming responsible to clean up, that's enough to trigger the policy. And allegations of bodily injury, that's another one that's very important. When you look at something like mold or a neighboring property where someone gets sick or they think that they're getting sick from a off-site contamination, all it takes is somebody to make an allegation. There could be many reasons why an individual is sick, but it's enough to trigger your pollution policy. Your policy should be triggered because it's going to pull in defense, it's going to pull in a lot of resources for you. So the premise pollution policy, like I said, it is the largest policy that we really deal with here, but it's really the best, and it's really what we focus on when we're looking at a transactional type policy, because it is tied to a fixed location. It is going to cover that cleanup cost. But what's important to note here is that these policies are heavily manuscripted, and I'll get into this on the next slide, but these policies should be tailored to your site. You should not just be taking a policy that the carrier gives you, that the broker hands you, and say, here you go. Every single one of these policies should take into consideration every fact that we know about your site. And that's important because, especially like I said, with the transaction, it's going to make sure that every possible area that we can provide coverage is provided for. The policy terms, they're going to vary, but on transactional deals, we typically recommend getting a 10-year site policy. It is getting harder and harder to get. There are still plenty of markets who will offer it. However, you have to have everything lined up. You need the correct information. You need the correct parties at the table to discuss this. And if you have all those aspects, it can be done. If you walk into a room with a phase one or no phase one and very little knowledge of the site, it is going to be hard to get that coverage or any really valuable coverage. The other policy that I'm briefly going to touch on are lender liability policies. This is probably one of the most underutilized policy out there, but it was designed primarily to protect the interest of the lender. What we are seeing is more and more markets are jumping into this. There are standalone policies which are generally placed on higher risk sites, dry cleaners, gas stations, manufacturers, portfolios, which we would place on a lower risk type policy, such as a 6-story walk-up, residential, light risk, low loan values, and those can be done. There's really only one carrier offering the portfolio programs right now, but you can have locations added to it. And then a couple of the carriers out there are also offering the coverage by endorsement. So you may have a existing site policy where they can slap on a lender endorsement, where in the event of default, the policy becomes the lender's. The policy term associated with a lender, and there are some carriers now where if the lender is involved, they will go slightly beyond 10 years. The most that I've seen so far is 13. But again, there has to be a lender involved, and it's generally in favor of the lender, not the borrower or the site owner. So the insurance process, and this is one of the things that really brought Diane and Elizabeth and myself together to talk about this. It's incredibly important when you're dealing with emerging contaminants on a transactional site that all parties are coming together early on. This is not the type of policy that can be put in place at the last minute. These policies take some time. They take input from all parties. Everyone has to know what's going on. So we have to function as a team. And I find when you function as a team, we can get it done. So the client, your environmental counsel, your specialty broker, your consultant, everyone coming together as soon as possible. Generally, as soon as a transaction is identified, a site is identified, that's when these parties should be engaged. And then bringing in the right underwriter. You know, there are certain carriers, there's about 40 environmental carriers at the moment. So everyone has a slightly different appetite for risks, or different risks, I should say. And then within each carrier, you have certain underwriters who understand things better than others. Some of those underwriters may have had more time in the field. Some may have had some environmental counsel experience. We do have some underwriters who are environmental attorneys. So knowing your resources, and that's really the responsibility of the broker, but knowing who they can go to and the right person to bring in is incredibly important, because that's the only way the deal is going to get done. Okay, so this is the next part that's really important. Once you've identified the site and you have the right people involved, what underwriting information do we need? In short, everything you have, everything you know about the deal, everything you know about the site should be presented. We will look at it. We will make the determination of what needs, what's valuable, what's not. So in addition to just the phase ones and the phase twos, remedial action work plans are very important so we can understand what's going to go on. The debt structure is incredibly important also. It's very important for your broker to understand how the financing is structured, because they can wrap around certain things. Indemnity and purchase and sale are also very important, and you should be wrapping the policy around those purchase and sale and indemnity agreements. They should be scheduled onto the policy as disclosed documents, and the underwriter and the broker should really understand what's going on. Like I said, all environmental reports, single thing that you have on that site should be provided. And it's important that you have good environmental information, good phase ones out there. I don't think that every phase one is created equal. So it's important that you're working with a trusted environmental consultant who really understands emerging risks, transactional deals, that kind of stuff. Propose and ongoing remediation is very important for the carriers to understand, so they can wrap their heads around, okay, what's been done, what's going to be done, how long into this deal are we going to have closure? And then the policy can be updated at certain points depending on what's going to happen. And then historic, current, and future use. The phase ones, I think the information right now is pretty good, and we can look pretty far back in history without too many data gaps. But knowing what was there, understanding what certain industries had done in the past is very important. Current use, because it wasn't always that. And then what it's going to be, future use. We are seeing many, many changes to sites. You're seeing things go in the way of, a lot of warehouse, a lot of distribution. People are leaving their homes less. So COVID kind of changed that. So it's important to understand where we go with that. Okay, so policy specific negotiations, and this is another area that is important to bring your counsel in and work with Diane on, or whoever your counsel may be. And this is why, the policies, like I said, they can be manuscripted. So the broker is going to work with the underwriter, with counsel to tailor certain things within the policy so that they fit your site and that everything as much as possible is covered. So choice of counsel, preferably Diane. Your choice of law, wherever they're going to try it, it should be wherever the site is. You don't want to have a site in California and choice of law in New York where the carrier is based. It should be, like I said, wherever the site is. Definitions can be tailored. Pollutant, pollution condition, those are all things that can be tweaked, and they should be, because like I said, certain sites are going to have certain, certain issues. Your reporting periods, preferred consultants, that's another way you can work with your carrier to determine who the consultant is. So if you have a site where a consultant has already been engaged and has been working on this site for years, you would want to have them be the preferred consultant in the policy. So you can discuss your rates with the carrier. And it's important because that person already understands the site, right? So there are carriers out there who have preset negotiations, preset fees with some consultants. And to bring in another consultant after you have an issue on the site that's tied back to another issue that Elizabeth's already been working on for a while, it could just muddy the waters a little bit. It could make things a little more complicated. It could take longer to come to closure. Certain coverage triggers can also be manuscripted and should be, depending on what you're looking to get out of your policy. Some of the other language that can be tailored is insurance in lieu of indemnity. So that's another one to work with your carriers on. Retentions, a lot of the policies that we see, we are looking at contaminated sites. So we know there's contamination there. When you're dealing with these emerging contaminants, you have to have the understanding that you're not going to walk into a site and expect full coverage for $100,000 in premium with the 50K retention. You have to have a little skin in the game. It's important to have that expectation early on. So just know that if you're going into one of these contaminated sites, know what you're getting into. Know that it's not going to be a $10,000, a $25,000, probably not even a $50,000 retention. For more contaminated sites, you're probably looking higher, 250, 500. I've even seen $1 million. So it really depends on what's going on at the site. Next slide, please. So key questions. These are questions that I get day in and day out. What's the process that a property owner can obtain a policy? Reach out, okay? Reach out early on. Reach out before you even have anything signed on the site to understand what can be done and what cannot be done. You know, if you're not able to get comfortable with the site and you're not able to get meaningful insurance coverage, maybe that's something you shouldn't get into. So reach out to your counsel, to your consultant, reach out directly to your broker, your specialty broker. How does the underwriting process work? This is one of my favorite questions. And again, we have to bring the underwriter in early on, as early as possible. It's almost an interview process to see who's going to, where this risk is going to fit best. And it's a comfort level as well. Certain brokers have certain underwriters that they have a great relationship with. They understand the certain types of deals that we get into. So it's important to, approach the right person. We want to get as much information as early on as possible. We don't want to have drips and drabs coming in throughout the process and then a big data dump, a week or two before closing, because it's just going to complicate everything and it's going to stress people out. The properties do not have to be free from recognized environmental conditions to qualify for a policy. Most of the policies that Diane, or most of the sites I should say that Diane, Elizabeth, and myself see are not clean. There is some sort of issue. It may have been a remediated issue or an issue that was in the past. So no, you do not have to have a clean site, because most of the sites that I see are not clean, and there's very few clean pieces of land left that are going to be developed. I think we've prevented ourselves and zoned against developing the virgin clean pieces of land. We want to keep those clean with trees and everything else. Neighboring properties with environmental conditions, that's okay. If it's the information is there and the site has been well delineated, so we know what, if any, impact is out there, it's not a problem. It's just important to know, where we are and what's going on. And very often, Depending on the area, we know the regional plumes that are out there. You know, I do a lot of work out in California. There's a lot of regional plumes out there tied back to historic industry. So we know really kind of what's going on in the area. And again, this is where a good consultant's going to come in, because they're going to have that information to say, hey, this is what's going on here. This is what's going on there. Are there instances or conditions that would absolutely prevent a policy from being offered or issued? Yes, there are absolutely some out there. However, it is extremely rare that we're not able to offer some sort of coverage on the site. So it may not be remediation coverage. It may be, you know, some sort of third-party liability coverage, but very often, you know, you're buying a site that's contaminated, you're taking into consideration the remediation that's going to be going on. And then again, how long is a typical policy term? For transactional, 10 years is very doable still. When you start to get into operational exposure, such as an operational apartment building or any sort of operational industry, most of the markets are going to come back to a 3-year period. Everyone's starting to gravitate towards the annual policy because that's what a lot of other lines do. They're all on an annual basis. So the carriers like that because they can kind of adjust their appetite. But for transactional, I strongly recommend the 10-year policy, both pre and new conditions. And next slide, I think that brings us to our discussion portion.
Diane, should I lay out the case study? Would that be helpful perhaps?
Yes, that would be great. Thanks, Elizabeth.
Super. So just last week, we were asked to do a peer review or a second opinion on a phase 1 environmental site assessment that had been prepared for a mattress warehouse, which had been in operation nearly 90 years ago, and then subsequently, had been manufacturing initially, and then subsequently became a warehouse. And so, as likely everyone on our webinar today knows, right, that demand for last mile logistics has soared, and the conversion of these existing assets for new e-commerce storage is highly active right now. Jared even spoke about that a little bit earlier. And so the phase 1 indicates that this property, while they manufactured mattresses in the 20s and 30s, they did subsequently and most recently become a warehouse distribution center. So since approximately the 1950s, it has changed the operation from manufacturing to storage and warehousing. And so the report concluded that there was no evidence of a release and therefore no recognized environmental condition. And so the historic use may raise some questions. What was the nature of manufacturing in the 20s and 30s? Were there hazardous materials used? How were they stored and disposed? We know, for example, that PFAS chemicals were not utilized that early as a fire retardant for fabric or mattresses until much later, until the 70s or 80s. So as many of you are aware, for big box retailers, the return of household materials often requires special handling and waste disposal. So during the site inspection, were there any evidence of spills or releases? And again, that's what falls under the REC definition. And so I contacted Diane for her insights, as well as Jared, to see what coverage might be available for this potential new owner and new operation of this facility for last mile logistics.
Thanks. Yeah. So, you know, mattress manufacturing might be a topic that would flag a PFAS consideration, except this one was outside of the window of time that was likely. So I'm not sure that a phase 2 is necessarily required here, but Jared may have some insights based on what the underwriters might want to see specifically, given the sort of long history that included, you know, some manufacturing back in the day, as they say.
Sure. So, you know, when you're looking at a site like this, it's really important that the broker, the underwriter, understands manufacturing in the U.S. They understand what went on and when certain contaminants were introduced into the environment, because that's going to tell us, you know, what do we have to be concerned about. Now, if they were manufacturing mattresses between the 20s and the 30s, highly unlikely that they were using fire retardants. Highly unlikely that it was foam. It was probably some uncomfortable combination such as coils and horsehair or some other material. So when you look at a site like this, I think a lot can probably be done without a phase two, but it's, we have to also look at what's gone on since, the 40s when they ceased operations. Underwriters may come back and say, well, did they truly cease operations in the 40s, or is that just, just a data blip that, wasn't reported properly, because that's happened plenty of times. And then what else has gone on? Have they really been in the mattress business from 1920 to now? It's uncommon that some of these sites stay that for that long, but it happens, right? So depending on what's there, what's gone on, what continues to go on. One of the other questions that may come up, did they do their own deliveries? And then what's going to happen around that is, were they fueling trucks on the site? In the 50s, 60s, it was pretty easy to throw a tank on the site, fuel your trucks up. A lot of companies have since moved away from that. Logistics, it's easier to keep the fuel off site. Nobody wants to get involved with that. So you may be looking at something like old tanks. But again, it's going to go back to the underwriter's understanding of what's there, the level of due diligence that we have. Is it a good phase one? Has everything been properly documented? So I think you may be able to get reasonable coverage without a phase two based on what we know about the site. But you may have certain underwriters who come back and say, well, I'm looking at the neighboring area and I see that some of the other things have gone on in this vicinity. So I'd like to know more about that, right? Because if you look at a manufacturing site, historically, they're not in residential neighborhoods. They're in manufacturing or areas zoned for manufacturing. So now, just because your site was using, coil springs and animal hair to manufacture mattresses and not using any fire retardant, doesn't mean that the guy next door wasn't doing anything hazardous or across the river. So there are a lot of variables that are going to go into, what can be offered and what information we need to get there.
Sure. And there's other considerations, other business considerations about, whether to do a phase two. One is whether a potential buyer has even the right to do intrusive testing, which is largely likely already negotiated by the time we hear about Elizabeth's, second opinion. Maybe not. Maybe it was preserved in a P&S. And then there's also, often a lender requirement or a lender consideration, as well as an insurance underwriting consideration. So all those things kind of have to play in together, and it's the risk tolerance to some extent, not only of the underwriter, but of the buyer. I mean, sophisticated buyers know, hey, there might be stuff. I don't really want to know it now. I get that I can, there may be other concerns, or I know what I'm dealing with. I've done, right now we're seeing a lot of real estate investors in this, last mile warehouse, footprint, and they know that you're looking at urban areas, and, so they, that's all partially factored in. And so all of those pieces need to be juggled together by the team, as you had said, Jared, earlier.
Right. And that's, and that's one of those things where if you can bring in your counsel, your insurance, your consultant before signing anything, that's obviously the best option, because if you can negotiate that purchase and sale to either include intrusive testing or to get a little more information, that's beneficial. But like I said as well, to understand the debt structure, to understand the finance and the lending agreements is very important as well, because that's going to determine what level of coverage you need. So it's important to know that, to work with the underwriter to figure out, what type of coverage we're going to get in place. And with that being said, we see a lot of these last mile development sites or last mile distribution facilities, and there are certain blanket cover, I shouldn't say blanket, there's certain endorsements that our underwriters do like to put on because they know the area. So maybe they're not going to require a phase two, or maybe you can get it done without a phase two. But it is likely that you're going to see fill exclusion, right? Because we know certain areas, they have historic fill. The site may have been developed in the 1920s. That doesn't mean they were putting, dredge spoils and other material down in that area, before they developed it. That happens all the time. There are certain areas in the US where there's just fill. It's what it is. I mean, we see it up in Boston. We see it in certain areas in New York. Where I sit in South Florida, it's all fill. I mean, this is a swamp. So it really, you have to know the area and know what's going on there. So that's important. And then when you're dealing with developing these sites, certain carriers have different site development exclusions, meaning they may not be willing to pay for contamination identified within the footprint of the development area. Now, manuscripting that or working with the right underwriter or carrier to understand who has more favorable terms within their site development exclusion is incredibly important, because not all site development or construction activity endorsements are the same. Some are more restrictive than others. So you have to know where to go. You have to know who understands the risk. Sometimes it's beneficial to use an underwriter who sits in a certain area because they know how to get the resources, they know what to do, they know who to talk to. They've written everything else on that block, so they can, make some opinions based on what they've written. So
that's great. Well, one of the things I'm always thrilled to hear when you give your presentation, Jared, is that, and I'm sure Elizabeth is too, is that you can manuscript in your choice of counsel and your choice of consultant, basically, because that has become sort of a rude awakening for many insureds who are trying to deal with a notice of responsibility or maybe a demand letter from a neighbor, and they want to use their counsel or their consultant who's been involved. And by that time, insurance companies sometimes become pretty entrenched and say, no, you can't, you didn't, you have to pick it in advance, kind of thing. So I appreciate your flagging those issues, because that, I think, is a little bit of a trap for the unwary. Most people don't think about that aspect. They're so focused on other pieces of the underwriting process. So
yeah, and it's one of those things where if you bring it up early and you start that discussion initially, it's something that can be done. The rates may be slightly different, and getting a carrier comfortable with what your rate is may take a little work. Sometimes you can do all of it, sometimes you can't, but it has to be done early. Like I said, if you're going to sit there at closing and say, hey, can we do this? You're going to get pushback. So it's really important. Do it early.
Right. So Elizabeth, any further thoughts from you on the hypothetical?
So I will echo what Jared said about being early. It's so imperative, right? We need the time to pull all the threads, gather all the information, understand the site history on the subject property and the adjoining properties. I think that's absolutely mission critical. And just overall, I feel like so much of what we're talking about is really about communication. So I would just add, having that ongoing open dialogue and starting it as early as possible is the most effective risk management tool. Bringing the right people onto your team early and communicating with them your concerns is really valuable.
Well, Elizabeth, you hit the nail on the head. It's a team approach. You should never feel like, counsel wants to do this, the broker wants to do this, the consultant's doing this. The most successful deals I've worked on is when everyone comes in, everyone's in agreement, everyone's comfortable working with one another. So that's why it's important that, your counsel knows your broker, and then the consultant and people they want to work with, and bring the underwriter in. The underwriter is part of the team, so I have underwriters that I work with where I'm entirely comfortable with, if the counsel wants to reach out and talk to my underwriter, that's fine. That's fine. It's the same team, and you shouldn't be working against each other, because it's not going to benefit anybody.
That's good advice. And given that today is the first day of December and we're approaching year end, we know it's a busy time to get everybody's deals done. We do have some questions, and if everyone's okay with that, maybe we'll switch to some of the questions as we have 10 to 12 minutes left. One, Elizabeth, that came up early on that I think was maybe not entirely clear about the new ASTM standard and the evolving emerging contaminants and what's going to happen with PFAS. So right now, as you said, PFAS is not a hazardous substance under CERCLA. We know the federal government is presently working to make that happen. The ASTM standard, I know, contemplates that, but we also know the ASTM or the the all appropriate inquiry rule contemplates, you know, right now the now, what do they call it? A retired standard? What's the past standard called? Anyway,
Right.
that's what's in the regulation right now. So can you give us a little bit of an update of what the moving parts might look like?
Sure, and it is tricky and it is confusing, and I think it starts also by being clear in your scope of work, which standard you're working under. I think that's an important part of the process, whether it's 13 or now 21. And yes, I should have said that the emerging contaminants, including PFAS, are considered under RCRA, and so that can be an important trigger as well. As you said, Diane, it is contemplated and it is addressed, and you can see that in section 13. And the idea, I think, is that everyone is aware that we need to be on the lookout, that we need to be thinking about it. And so for every unique site and situation, you should be contemplating potential emerging impacts, emerging contaminants such as PFAS.
Sure. Yeah. And we know EPA, I think the new ASTM standard's been submitted to EPA, and they'll go through their rulemaking process to have it adopted in the all appropriate inquiry regulation, at which time it'll become, you know, mandatory, I guess, mandatory if you want to take it benefit of the presumption. So that's helpful. Let's see what else we have. I know there's a number of questions about liability. Now, interestingly, this program is not to tell you where you have liability. It's to tell you where you might have risk that can be managed with insurance, because not all of these things will give rise to specific liability. We had a question about if PFAS is mobilized based on stormwater off your site, you know, do you have a potential risk for natural resource damages downstream, maybe impacting habitat? Potentially, but the great thing is that's what insurance is for. I don't know whether, you know, are you the source of the PFAS? Is it's somebody else? Were you a pass through? There's lots of things that would impact whether you're liable. But as Jared said, it's the allegation that triggers the coverage. You don't have to wait till you're found liable. And that's part of the great benefit of it. Same thing with climate change. My point was not that there aren't other kinds of, it's the release of the pollutant, no matter how it's caused, that triggers the coverage. So I only was trying to flag that climate change is a new or emerging method in which pollutants can be released that we may or may not have been focused on before. You know, people used to think when you did your phase one, it's the rusty tank that you have to be worried about that is going to release the pollutants. Now, as you think about due diligence, maybe partly what you want to think about is it's the area of flooding in the old historic NAPL site that's going to release the pollutants. So it's not really coverage for the climate change itself, or, you know, separate from an act of God or some other event. It is the consequence that's insured with a different trigger. Do I have that right, Jared?
Yes.
Great. So let's see what else we have for questions here. Jared, I should let you take the one from your colleague about what's the standard force majeure clauses, what impacts. I'm not sure I understand the question completely. So if you want to answer, the question is, what implications, if any, will climate change capped site, for example, on standard force majeure clauses?
Let's see. I think we're looking for a legal answer on that.
Yeah,
we can get back to them on that.
Yeah, and if we didn't answer your question, the great thing is they will be recorded, and if you, so long as you put your name in, we can also respond to you afterwards. One question was, would a policy respond to allegations of air quality issues if they arose from, for example, mold or something else? Particularly, you see this now all the time in dorms or multifamily housing. And we saw it for years with vapor intrusion as a result of dry cleaners. Like, what about the indoor air risk of pollutants, which is one that's, a big concern for humans?
So absolutely, the policy will respond. And if you look, the remediation associated with the mold may not be all that much, but when somebody makes an allegation that they're sick or they have an existing health condition that's been exacerbated, the policy will absolutely respond to that. And then also business interruption. If you have to shut down that facility to remediate mold, that may be the bigger cost. That may exceed your retention or your deductible on your policy. But it is important, if you do have somebody who makes an allegation, regardless of how big it is, especially if somebody's making an allegation that they're sick, to put the carrier on notice right away. Because I've seen plenty of claims where, they report the incident, nothing happens, and then a year or so later, now they've got this health condition. They're going to try to tie it back to mold in the apartment, in the dorm, whatever it may be. And if you didn't notify your carrier, that could be a potential problem, since the policy is claims made and reported. So yes, they will respond to those conditions. It is important to notify someone as soon as possible if it does happen, but yes.
Yeah, and that seems to be the big thing is these are specialty policies addressed to this. So don't think if you have a commercial general liability policy that you're going to get this coverage, because there's a pollution exclusion. So be sure you notify the right carrier, but you have to have the coverage to begin with. We have a couple more questions. I know we're running out of time. One question was, and Jared, this is for you. How is the dollar amount of the policy fairly determined? If a phase 1 recommends a phase 2, but it's decided not to obtain a phase 2 for timing or other reasons?
So there's a lot that goes into the premium on the policy. Everyone has a different rating model. Everyone has a different tolerance for risk. Size of the property, how big it is taken into consideration. Obviously, there's going to be more risk with 180,000 square feet than there are with 10,000 square feet. What's there? Is it light manufacturing, or is it residential, where you have, a 100-unit apartment building and that many families that can make a claim against you? So there's a lot of variables that are going to go into the premium. The phase 1 recommending a phase 2, I feel like, and Diane, Elizabeth, jump in here. A lot of phase 1s will recommend phase 2s because sometimes you just don't know, right? There's only so much information you're going to be able to get with a desktop review and walking through the site. So you are going to have a lot of consultants recommending the phase 2. So it's not uncommon that we see that. So even if you don't do it, it's still possible to get coverage. Again, it's going to depend on what was there, what is there. If we're looking at an apartment building that was built, 5 years ago on a piece of undeveloped woodlands, yeah, I don't need a phase 2. But if you're looking at something that was developed, in a former industrial area in Massachusetts, you should probably have it. So again, it depends. It depends on what your timing is, depends on the underwriter you're working with, who's comfortable, who's not.
Thanks.
So Jared, can I jump in and add to what you've said? When
Sure.
we talk about getting information early, this is a really good example. Sometimes recommending a phase 2 is because there wasn't enough time in the phase 1 to pull all the threads, to have all the historic information, tell the story of the subject property. And you really need all that information to work in concert so you understand what potential issues are on site and potentially off site. And so that process, if it starts earlier, you may be able to gather additional information. If there is that request for a phase 2, but information can be obtained subsequently, and that amends the conclusions of the phase 1, that report hopefully is updated, or there's an amendment letter or further documentation that perhaps defines why the choice was made not to do the phase 2, and maybe it was determined not to be necessary.
Right. And it's, it's very often on a lot of these bigger transactional deals, what we will see is a draft policy come out first. So they'll go out, they'll do a draft phase one. They'll go out, they'll do the phase one, they'll get us a draft phase one very early on in the stage in the game. And then a little later on, we'll get a finalized copy where they have gotten all those FOIA requests back and they do know more about it. So that, again, like you said, timing is really everything.
So one of the questions, thanks, and I agree, you can't start early enough on this. I think we all have experienced that and know that. One question I just want to confirm, Jared, so natural resource damages, are those a covered claim? They're a little bit different than just, pollution migration response action costs, because they're a governmental claim for, well, you know what they are, and they're the public's interest in the natural resources. Have you seen it much in claims on that?
So yes, I have seen some natural resource claims. Most of the policies out there will have some natural resource coverage, or they won't exclude it, but it is something that can be worked in as long as we know what's going on.
Okay. And then I guess maybe the last question. So we have a site that's going to be redeveloped, another big warehouse or manufacturing facility, lots of extensive diligence and soil and groundwater data, but not under the building because it wasn't, maybe an operating business, or, as everybody knows, it's not that easy to get data from under the building. But given the extensive due diligence around the building, how hard is it to get coverage for unknown conditions but pre-existing under the building? That to me seems to be the exact sweet spot of what you might cover. But
yep, so it is very possible to get coverage for unknown pre-existing if the site has been well studied, well characterized. So yes, you can get it, as long as we know, kind of what's been done, to the extent that it's been done, what's been found at the site. If we're investigating a site and you're finding petroleum hydrocarbons all over the site, but maybe they did plating and you didn't find any heavy metals, well, that may be a little difficult. So it's going to depend on a couple factors, but if it has been well characterized, I think you can get coverage for pre-existing unknown.
Great. So we're at the top of the hour. We had a couple other little questions that we can follow up directly with folks. I guess just to confirm, so in terms of, and this may go to the definitions, the manuscripting of the definitions, but in terms of the coverage for hazardous substances or pollution, it doesn't matter, Jared, or you can write in. So we know PFAS, for example, is a hazardous material in Massachusetts. It's actually been added in, but it's not yet in a federal hazardous material. But if you covered it and found it under, and it was regulated under state law, the policy would respond to that too.
Yeah, unless it's specifically excluded, then yes, it should, depending on what the law is. Yes. Okay. But again, it's PFAS. It's changing literally every day. As you know, as Elizabeth knows, so we have to pay very close attention to it. It's making the hair on a lot of people's necks stand up right now. And I do think certain classes of business, more and more carriers are going to start restricting the coverage just because, hey, maybe they did use it at some point in time. We can't tell, we don't know. So again, having as much information, as much due diligence as possible is going to be key. Okay,
that sounds great. And any final words from you, Elizabeth, before we sign off?
Thank you so much. I would just reiterate what Jared said. And as you've said, Diane, it's so important to stay on top of this, and having that team-based approach is so effective, and starting early is really critical. So I would encourage people to make sure you have your team assembled really from the very beginning, from the earliest conceptual idea of acquiring a property. You really should have your team in place and be ready to go.
Thanks. And for folks in the audience, the slides do have bios and contact information. We didn't go through all that because we wanted to maximize our time. But feel free to reach out with questions. And if we didn't answer your question, or if I garbled your question, feel free to reach out. And happy December, everyone. So look forward to seeing folks in the future program.
All right.
Take care now.
Thank you so much. Bye-bye.